We're going to be defining for this course the exchange rate as the number of foreign currency units you get for 1 unit of domestic currency. You choose your home country, take 1 unit of the currency of that economy, and then figure out how many foreign currency units you get for that 1 unit. The exchange rate could be defined differently. How many domestic currency units do you have to give to get 1 unit of foreign currency? In fact, in many countries, people define the exchange rate that way. But for the purposes of this course, to make sure that we don't get confused between the two definitions, we're going to focus on the definition I have here. You choose your home country and you figure out how many foreign currency units you get for 1 unit of domestic currency. For example, if you take the US as our home country and we want to know the exchange rate of yen versus the dollar, we write E equal to 100 yens per dollar. Couple of more definitions. If the exchange rate goes up to 105 yen per dollar, for example, we say the dollar has appreciated 5%. Similarly, if the exchange rate drops to 95, the value of the dollar has gone down relative to the yen, we say the dollar has depreciated by 5%. Couple more definitions here might be in order because you might have heard of devaluation and revaluation, which are similar to these concepts of appreciation and depreciation, with a slight difference. If the government of a country or central bank of a country controls the exchange rate and then reduces the value of domestic currency, we say the government or the central bank has devalued their exchange rate. Depreciation refers to the loss of value in the market when the exchange rate is floating. Similarly, if the central bank raises the value of the exchange rate, we say that the central bank has revalued the currency rather than appreciation, which is a concept that refers to floating exchange rates. If you need to look at the exchange rates, know more about what's going on in the exchange rate market, here's one source, financeyahoo.com. To give you a picture of what's happening in the foreign exchange markets, I've reproduced here a table that shows the share of various currencies in the foreign currency market in all the trading that happened in December of 2015. As you can see here, and this is typical of many other times in recent years, about 87% of transactions involve the dollar on one side. The euro is present in 33% of transactions, and then Japanese yen is present in 23%. Other currencies, a lot less, and after about 12 currencies or so, the numbers become very small. Notice that the total of the percentages of times each currency is present in the foreign currency market transactions is 200%. That's because each transaction involves 2 currencies. So a big part of this 33%, for example, of euro present in transactions is in fact euro versus the dollar. So this table shows that the dollar remains very predominant in the foreign currency markets. Foreign currency exchange is done mostly via big banks. Citibank from the United States is a leading institution in trading foreign currency. Deutsche Bank is also very important. Barclays Investment Bank in London also is an important player in this. And then there are other banks that engage in foreign currency trade. A little bit of history also could be helpful in understanding what's happening these days and what are the debates. Here's the history of the US dollar vis-a-vis some foreign currencies since 1960. In the 1960s, after World War II, a system was established which was called Bretton Woods system of exchange rates, and currencies were fixed relative to each other. Occasionally there were changes, but that was via agreement between central banks of the countries involved in that agreement. That system did not last very long because there was misalignment between exchange rates and the reality of trade in the world markets. And as a result, pressures to change the exchange rates, and eventually in 1971, the United States left the Bretton Woods system, and no longer it could be held together because the dollar was the main currency being traded. So you can see that after 1971, different currencies went in different directions when valued against the dollar. This is the value of a dollar vis-a-vis various currencies, and you can see that the dollar lost its value relative to yen and German mark, while gained value relative to some other European currencies, especially Italian lira and British pound. This graph shows the trend until 1999, because at 1999 things changed. The euro was formed. And once the euro was formed, the exchange rates of many European countries was unified into one. This map gives you an idea which countries are within the euro area, which countries within Europe, European Union, but not part of the European Monetary Union. The blue areas are European Monetary Union. And in recent years, there are other countries like Czech Republic, Latvia, etc., that have joined the euro. There are also countries that have adopted the euro but are not actually part of European Monetary Union. They're very small economies. Here's the history of the euro since 1999 when it was formed, but I've also produced a graph here based on the data from St. Louis Fed that shows the value of the euro if it had existed as a combination of European currencies before 1999. This gives us a perspective on where the euro stands these days. Right now, it's about 1.1 or so, a little bit higher, dollars per euro, but it has been fluctuating quite a bit. The graph gives you the perspective that the 1.1 seems to be about the average in the total range. However, exchange rates could change a lot, and sometimes quite rapidly, as you can see here, the euro falling from 1.4 or so to 1.1 very quickly in 2015. Here's the trend in the yen-US dollar exchange rate, which shows that the yen didn't have much value. The $1 was equivalent of 360 yen in 1971 when the fixed exchange rate system was in place. And once the system fell apart and exchange rates became floating, very quickly the yen gained value, and around 920, which is about 2/3 drop in the value of the dollar vis-a-vis the yen. Ever since, the yen has gained some value, at least until recently, and then the dollar has again recuperated to some extent. Here's the exchange rate of the US dollar vis-a-vis China's yuan. Yuan has been managed and mostly has followed the fixed exchange rate regime. The exchange rate of the yuan versus the dollar was devalued. You can see that a dollar was gaining value relative to yuan quite sharply in the 1980s, up to 94. In 1994, there was a massive devaluation of yuan. The dollar gained value. And then for a while, the Chinese central bank kept the value constant, as you can see here, until 2005, 2006. And after that, it allowed the yuan to gain value, the dollar losing value relative to yuan. In recent years, the yuan has been slightly losing value, depreciating in the market, or some would say it's being devalued because the Central Bank of China seems to be managing the exchange rate quite effectively.